Happy Friday, traders. Thanks for joining me today on Non-Farm Payroll Friday here in the U.S. It is the 7th of August, 2020. It's 8:03 a.m. Chicago time on what appears to be a beautiful, bright, sunny day here in the middle of summer. Feels more like spring. It's cool out. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm assuming you're hearing me nice and clear. Let's see, microphone's working, cool. Um, this morning, we did get the non-farm payroll release, and the overall picture is kind of interesting. The bulk of the indices are lower than yesterday's settlement. Crude is off 21 cents. It is the laggard, down 0.5%. Really, this morning is a mixed bag. The DAX is up, the dollar's up for a change, and everything else is down. So we've got the versus yesterday's settlement. We've got the 10-year notes down 4 big ticks, or actually one small tick, and the bonds are down 4 big ticks. Everything else is lower than where we closed in the indices yesterday. Of course, we did close pretty high yesterday on what turned out to be a double distribution trend day yesterday. So that's where we are. In case you just came out of a cave or a hangover or something, non-farm payrolls came out and were slightly better, 1.763 million versus 1.62 million. The unemployment rate still pretty high at 10.2. The expectation is 10.5. The prior is 11.1. So it's pretty much chugging along in line with what was expected essentially. This morning we also got balance of trade out of Germany, came in at 15.6, much higher than the 1.4 billion euros expected. So that's looking good for Europe, and the DAX, of course, is hanging on to yesterday's gains. We do get wholesale inventories at 10 Eastern, a half hour after the open, then Baker Hughes at 1 and consumer credit at 3, and that wraps it up until Sunday night, where we pretty much have Sunday night we have the China inflation rate year on year at about 9:30 Eastern, expecting 2.7%. PPI is also coming out at that time. So that's where we stand there. Nothing. The issue with Washington still exists. There's no deal yet. They spent 3 hours yesterday or last night negotiating between the House and the executive branch, and they're supposed to break for recess, but the Senate is going to be provided with 24 hours um, warning or 24-hour notice to come back in and vote on whatever is agreed to between the House of Representatives here in the U.S., which is run by Democrats, and the executive branch, which is run by Republicans, each wanting a different type of package. So Monday is supposed to be the day when this thing is going to be voted on. They're working very quickly. Today is the self-imposed deadline for unemployment benefits and so on, and it doesn't look like they're going to hit it. So that's where we stand. Yesterday, here's what I expected. Given the fact that we tested down to the 3,300 and a half, which was the gap zone low, and we were opening at the time beneath the point of control the prior day at the 3018. This is still a pretty significant area to monitor. The expectation is that we are likely to test higher and squeeze out some of the late longs, and I was looking for a push down. Oop, blue does not look good here on this particular chart, so let's switch it back. So I was looking for the market to repair some of these structures below on what probably is the biggest rally week in a while. It's a unidirectional market, but this was obviously extremely wrong. The secondary is a dip down that pushes above the 33.18 and the expected consolidation to balance. The idea is that when we form a top, tops are not formed like this generally. Bottoms can be formed like this. We've seen those. I mean, heck, there's one right here. But tops tend to be rounded. They tend to take a while. And in that, we would have several days of rally, then balance, then balance, then balance. And then finally, it starts to roll over. And that's what I was reading here, which was absolutely wrong. But, we're playing the probabilities, we're playing the auction as it forms, and so I have to read it for what it is. And the expected action is scenario one. Instead, it consolidated on top of the 3018 and just blew up to the upside, giving us a trend up day. Here it is. That's just the peak of it. Let's change the scale. This scale here is, I believe, 30 points. So this is yesterday right here. There's um, there's the gap from the prior day, gap zone high. This was tested in the overnight session yesterday, and we have an open auction that was pretty tight. The opening swing was pretty tight, 13 to 18 half. And remember, I was looking for the 11 quarter to break to start to potentially end the one time framing up and start the process of grinding lower. That's really what I was reading. It did break that 33 quarter and went below it by 3 ticks and then bounced right back up to mid. This created an opportunity for a short here for another run at the low, which was set up beautifully. You could see that it pulled back to mid, it pulled back to a VWAP right there. Mid is this line, these boxes. VWAP is the cyan. They're on top of each other here. And, one scale out and then comes right back and boom, it is explosive to the upside. Yesterday was another day where I, unfortunately didn't have a very good read. And it ultimately ended up being a runner in the end. So we ended up with a distribution down below, right on top of the 15-18 area, and then we have a bunch of single prints that formed up here with a new distribution and acceptance around 33.40, and we are currently trading at 33.31, which is the last price that traded before the non-farm payroll release. We call that the SOC, or the scene of the crime. 33.31.75 is where we took off from, and with the non-farm payroll, we tested the prior high by 2 points almost and came right off, and we are right here in the low volume node, which creates a pretty decent opportunity. In that we're in this in between the two distributions, and it gives us a clear risk reward scenario to tinker with this morning. So that's where that stands. I mean, really, it's the market just can't get enough buying, and of course, this is the largest rally we've seen since the low in March, late March. This is the largest rally we've seen across the broad market in a long time, possibly ever. And so there are a lot of people piling on to stocks. This reminds me of the dot-com bubble, which is exactly when I started trading. I started trading when WorldCom was hot, Enron was hot, where I could just log into my what was it, Scottrade or E-Trade account back then. I think it was Scottrade. Log into Scottrade and find somebody saying something about any stock, buy it, and be up, 8 to 10% by the end of the day, 20% by the end of the week. And that's where I thought I was just a trading and investing genius in 98, 99, and 2000. 2000 is when I started to actually trade. And so this is kind of a similar environment where people are coming in through Robinhood or whatever, and they just can't buy enough stock. And these stocks are really performing incredibly well. And we are trading a product that is built on stocks. On the underlying sector is the stock market. So no surprise there. The auction is really very, very much one way, and it's a price action trade. This is why I brought back my classic tape that you see here on the right. This is my tape filtered by 100 lots and alerting for anything 150 or higher, so I can see um, what we're looking at in terms of price action, um, because this is uh, more of a price action based trade. So that's where it stands. Yes, that's what I'm talking about. I'm talking about the big stocks. I mean, look at the rally from the low. Um, so anyway, yeah, the 90. Okay, you're missing a point. That's great. Cool. In any case, switch the channel. In any case, this is where we stood yesterday. Here's where we are in the overnight session. Pretty much a drift down, and consolidation in the lower end of the range. The profile has a kind of a low belly to it, a low end skew, and has formed this slightly down skewed trend channel, and has broken it in the non-farm payrolls release, and now we're back in line. It is hanging on to the first of a series of single prints here at 33.26. The low overnight's 33.23 and a quarter, and we are kind of holding in this range. The overnight volume is 300,000, a little higher than what we would consider to be the norm for this time period here for the most recent past. And we still have, weak structures below the gap zone just underneath us, the gap zone below that, and a lot of LVNs and single prints to kind of work through. So that's where this stands. It looks weakish to me. It looks like it has attempted to hold higher prices and keeps coming back to the low end of the range. But that usually would color my view that it's very likely to rotate down to 33.15. 33.15 being the target to the downside. But I got to tell you that lately, it's the targets to the downside have been very few and far between in terms of attaining them. And when we do, it really turns around and pushes hard. It's a buy the dip kind of environment, and we need to just, I'm going to lay off of selling the pullback on an impulse down. That has not worked so well. Didn't work so well yesterday either. I passed on the mid on the way up, which ended up turning a little bit, but ultimately ended up, launching the rally from there. This is what's going on in the overnight. The non-farm payroll release was right in here. We push up and we come all the way back, and we are tackling the full session VWAP at 33.2650 or so on my charts, which is slightly different on Bookmap here, a slightly different session. But overall, you can see that in the middle, there wasn't much participation or much in terms of a fight in the middle. The size has remained in the mid-century figure at 33.50 above 52. I do have a stock zone at 51. There's a There's an MC point of control up there, and then beneath here, 3315 has liquidity below, and I mentioned the 3315 being the prior day's point of control. This area down here, we'll see if it works its way down. I'm not bearish, I'm not bullish. I'm going to just let it do what it's going to do. What I do see here, though, is if it does not climb up this string of buy orders, in other words, if it does not climb up this on the open, then it's very, very likely to turn over and push into 33.15. Today is going to be strictly price action based trading. I'm not going to look for structure at all. We're trading in a bubble after a correction, a pretty sizable correction for the year. But in trading this bubble, it seems like any structure to the downside has failed so far. So we need to see this thing get back below 3,300 before sellers will start, or weaker longs, the weaker hands on the long side will start to think about taking profits and bailing on those positions. But so far, it's more buy the dip, and we are within earshot of the all-time high in the ES, and of course, the Nasdaq made new all-time highs yesterday. It pushed to 11,283 overnight, and of course, that's dominated by the Fangman stocks. And those have been really the stocks carrying the market. I mean, we're talking about huge market caps and valuations for those stocks. So it's actually a pretty decent idea, if you haven't done so, to pull up to create a series of charts, a block of charts built on those stocks, on those main stocks, and kind of keeping an eye on how they're participating. This is very similar. I have one very similar to my indices chart here. This tracks how things are performing from the open. I'm not interested in the history of it. I'm just looking at how did they perform from the open. The zero line is the open, and plotted on a closing price basis. And you can see here, how each market is participating, or underlying sectors participating. These sectors that are represented here represent about 76% of the market cap, or the weighting in the S&P 500, not the market cap, but the weighting in the S&P 500. I would recommend creating a similar chart if you have real-time data for stocks, for the key stocks that are kind of pushing the market around currently. The money is really concentrated in a small group of stocks, relatively small group of stocks lately, techs mainly. So let's take a look at what's expected for today. I could say that I could just give you a quick plan, and that is buy the dip. You would have done really well. You wouldn't have needed to hear me ramble for 20 minutes every day. That would have worked out really well. But if I do that, I'm concerned that maybe it'll top out. But it's just the market has a way of playing with our minds. But overall, what I'm looking at this morning is a very likely, now remember, this is an excess here, but the problem is this excess is on news on a major economic release, and so I'm not treating it as a normal excess. And so what I'm doing this morning is I'm not going to sit here and draw scenarios. I'm going to highlight instead what the key areas are above and below. So above us, 51 to 54, key test area, 51 to 54. And then above there, we have the 33.62, 62, and then 80, the 80 figure. And then beyond that, you're looking at all-time highs. Beneath us, we are looking at the 15 is large. 15 is large, and then beneath that, we do have the '06 and then the 3300. So 1506 and then the 00, the millennial figure. Those are the key areas to test. Anything in here, any kind of bopping back and forth in here, I'm going to just simply watch. I'm just not going to draw lines on here because it doesn't really make a difference because the market is really one directional. It is not auctioning back and retesting the areas it has just accepted as value or moved away from. Usually we make we we consolidate, we push, consolidate, and if the push results in a pullback, we test the area. We either test the point of control or the LVN of it, consolidate, push again, consolidate, and then make the next move. We tend to test what we have just come from, and it gives the buyers a chance to buy the dip. It gives longs a chance to add or to get more confident about price acceptance when they see that a prior area that was accepted is now too cheap. But it has not been doing that. It has been pushing, flagging, pushing, flagging, pushing, flagging. It's a one-directional kind of a trade. So just pay attention to these big areas. The intermediate areas are outlined here. We've kind of trampled all over them in the overnight session. The 45 area and the 28 area were in play yesterday. These are the areas where the market turned before it broke higher. And we do have single prints beneath us at the 28.50, the 26. We have single prints at 36 as well. Those are the areas to watch. Okay. So I'm going to leave you with that. Good luck today, and keep it tight. It is non-farm payroll day, so it might get really quiet after the European close at 11:30 Eastern. Watch your risk, and I'll catch you on Monday. Take care.